What's good, ladies and gentlemen? Welcome back to a brand new video on my channel, and today we are remaking a video that I've already made, which is the AMD, because we are going to be making it better. We're going to be making a better video than we did the first time around. So here we go. Right, the terms that you guys need to know, the terminology for this video are very simple. We're going to go over all of them. You need to know trend, bias, drawn liquidity. All right, and then from there we'll figure it out. All right, so trend. All right, what's a trend? We're going to go over this very quickly. It's basically market either moves up, down, or consolidates, right? So, or sideways, I should say, right? So an uptrend is a bullish trend, is when your market is doing this here. Okay, a downtrend is a bearish trend, is when your market is doing this right here. Basically, you're making lower lows and lower highs. A bullish trend, you're making higher highs and higher lows. Okay, you're going up. An easy way to tell is when you look at your chart from the left to the right, is price higher or lower than it was at the start, right? Or at the highest point, I should say, or the lowest point. So now that we've established what a trend is, if it's still unclear, look it up. It's very basic stuff, very simple. We'll move on to bias. Bias is what you think the market will do. So in a bullish trend that's going up, you can have a bias where price will reach down a little bit before going up again. That's your bias. You do not enter a trade if your bias is not being respected. You need to react to what the market's telling you, but you also need to understand that you need to know what's going to happen a little bit prior before it happens, and the market needs to confirm that you are right before you enter the trade, and that is how you will get the best win rate possible. Next up, the drawn liquidity. The drawn liquidity is where the market appears to be drawing towards. All right, it needs to be obvious and it needs to be confirmed. So if I take a look, or we take a look at this example here that we have on the left, right? We have this low here that market moves up and then absolutely crashes down before reversing right before it. Market appears to be drawing towards here. It's been confirmed by this crazy move down, very fast, very efficient. Now we're getting a pullback. We can assume that this is our draw liquidity for this New York session that's here. Okay. Next up is EQ, premium, and discount. EQ is 50% of a range. All right. Premium is an area to sell. It's the higher end of the EQ. And discount is the bottom, is the area to buy. It's the lower end. So if you're looking for shorts, you need to be shorting only in the premium, only above the 50% line. If you're looking for buys, you need to be buying below, right? Now, when I say only buy below, it's only when price reached it. You don't need to press it as soon as it gets to it. You don't need to wait. If it breaks back below it for your short and now you're below EQ, you don't need to be like, oh, but now we're below, I'm not going to take it. No. Price retrace to it, get you confirmation is going lower. You have a really good model here to go short, okay? Now, let's put all this together. Let me explain to you guys what I mean, okay? You guys also kind of need to understand time frame alignment. Now, what is time frame alignment, right? Time frame alignment means that you cannot be looking at your 1 minute trend and enter on the 5 minute. Just like you cannot be looking at your daily trend and enter on the 1 minute. You need to use time frames that work together. So your 15-minute trend, your hourly trend, into a 5-minute reaction, into a 1 minute entry. Anywhere of this, something like this. So we're going to go over something very simply here, and I'm going to explain to you guys exactly my train of thought as this thing is going down, okay? So market pulled up, market reached down. We're going to act like we're trading this day here, okay? This day here. So either we trade Asia, and my cat is doing this fucking hello. So we're trading Asia, let's say, right? Super simple here, right? We have our big move down. We appear to be drawing towards here. So our drawn liquidity is this low here. Our trend is bearish, right? We're moving down, right? We just had a little retracement here, but overall we're bearish. And then our bias is to go higher to the EQ and then lower. Now we reach EQ in Asia, but look at what happens when you actually zoom in just a little bit. What do we have here? Well, you can see that we have a 5-minute model here for Asia, where we have the accumulation here, the manipulation up here into the distribution right to our draw. Now, when this happens in the 5-minute, again, our 15-minute had the premium discount. Okay, so when we're on the 5-minute here, you cannot assume that this draw is the one getting hit. This is an hourly low. This is a 15-minute low. You do not go on the 5-minute time frame, do your analysis, and expect price to go to this low. All right. If you're on the 5-minute time frame doing your analysis for your AMD, you will target a 5-minute low. So you can target this Asia low here, for example, and you wait for price to confirm your bias. Your bias is what? Higher into EQ, into lower into sell side. What happens? Higher into EQ, lower into sell side, big displacement below the low, fair value gap, whatever you want. Enter on the fair value gap, touch, stop above the gap. EP at the low, you just hit a 1 to 3R on your 5-minute time frame. Again, you need to understand time frames and how they correlate to each other. You can back test, you can forward test for that. Super simple though. Use the time frame that your time frame you do your analysis on. Don't use a time frame that's super different from it for your entry or for your anything else. If your trend is on the 15, your analysis is on the 5, your entry is on the 1. Simple as that. Don't do trend on 4 hour. You can do top down analysis obviously, but stick to some very specific time frames. I'd say 3: one for a trend, one for analysis, one for entry. This is literally what I do. What I did right here was a 15-minute trend, right? A 5-minute analysis, right? With the AMD, and then I lost it. And then from there, I even gave you a 5-minute entry, but I'm sure if I was to go to 1 minute, I would find an even like kind of better entry, right? So now you go on your you go on your 1 minute, right? You have big move down here, big retracement up in here. You can even enter on OT, I'm guessing, on this fucking thing, yeah, whatever. And then you could get your second confirmation here, enter on second stage. But you get what I'm trying to say, right? Stay on the same time frame, do your analysis. But then here's the interesting part, right? You're gonna say, oh, but I don't trade Asia, I trade New York. Okay, that's cool. So in New York, same thing, 15-minute. But this time we're gonna move up slightly because these are very important lows that we have here. So we're going to hourly time frame, okay? So on our hourly time frame, we can see that we have a move down, retrace back into EQ on the hourly with this hourly low, like kind of acting as our draw, right? Now, with that being said, for New York, you can expect price to then push to this hourly low due to the hourly EQ being hit here, okay? So on your 15-minute, you drop down, right? You get a move up here. What is this? What does this look like to you, right? We just did our hourly trend, right? Now we have our 15-minute sweep of liquidity up here. If you drop down to the 5-minute, you can even see that we most likely have the AMD model that you guys love so much, right? Right here. Accumulation, manipulation at market open, distribution. What is this? What is this? This lacing down here? Confirmation that we're ready to go to our draw. What do? We can either enter on our gap, we can enter on EQ of this leg, we can enter on OTE, we can enter anywhere really, right? All we got to do is wait for the pullback at this point, right? And then we just enter, right? On the 5, on the 5. You can even, there's probably even a 15-minute gap. All I'm saying is don't overcomplicate trading. Pick something that you want to do and do it, right? Trend, bias, draw liquidity. You want to enter on the 10 a.m. PO3, by all means do it. Just know where you're entering and what you're doing, all right? So if I was to enter this trade here on the 15 minutes, super simple. You see the candle goes up higher here, right? Big displacement down, pull back higher. What's it called? Wick rejection at the rejection block here. That swept the liquidity. Bang, entry at the rejection block, right? You just pick anything. What I'm saying is a lot of you guys are stuck trying to understand every single ICT concept. No, go for trend, go for bias, go for drawn liquidity. Okay, stick to 3 specific time frames for these. Once you've figured out your bias, if price is doing it, if your bias is the AMD, so you're currently accumulating, your bias is to go lower than higher or higher than lower, wait for it to happen, and then when it does, enter on the confirmation that you want. Once your trade is being confirmed, you can enter on rejection blocks, inverse fair value gaps, order blocks, fair value gaps, EQ, OTE. There's so many things that you guys can enter on that it just makes no sense. If you guys start thinking about all these things, you're gonna start to kind of doubt yourself, or you're gonna start to overthink it, and you're not gonna enter the trade ever, right? What I'm trying to say to you guys is, if you guys want to trade the power of 3, that's fine. Find your trend, find your bias, find your trend, find your drawn liquidity, find your bias on confirmation of said bias, and on return to EQ, find an entry. Whichever one you want, and stick to it. After a few trades, you'll know what you want, you'll know what's going on, you'll have the data to back it up. Look at your data, analyze it in your journal, decide what you like best, decide what works best for you, take that, apply it, and trust me, you'll never work a 9 to 5 again. On that note, guys, if you guys have any questions, please like, comment, subscribe, drop your questions in the comment below. Love every single one of you. If you guys again have any questions, please feel free to ask. I know I speak fast, I know I kind of explained it quickly. I've been training for 8 years. I'm trying to help people, right, for free. And it's kind of hard for me to explain it properly, or not properly, but it's kind of hard for me to explain it in the eyes of somebody new, because obviously I haven't been new in a long time. But if you guys have any questions, please be detailed, put them in the comments. I'll answer very simply. And please, oh please, if you guys want to learn how to trade like me, you guys can join the free Discord. Links in the bio. Love every single one of you. Peace.